Well, g'day there everybody. Thanks a lot for joining me on this Monday afternoon market recap. We still have approximately 15 minutes left in today's session. However, it is looking quite distinctive in the fact that we have broken again continued support around 24,750 on the Dow Jones Industrial Average, and it appears as though we are going to sell off on a little bit further down to roughly 23,750 to 24,000. A lot of what we spoke about over the weekend appears to be continuing very early on, or at least into the first session of this current week, i.e. if you can remain a little bit disciplined, a little bit patient, remain on the sidelines and allow this secondary sell wave to exhaust itself, what we're looking at is potentially a tremendous buy opportunity once these markets pull on back down to the calendar lows. If you pay attention to the Russell 2000, that is very close to achieving that milestone. Also, if I can move on over into the Dow Jones Transportation Average very, very quickly, you can see that we're actually overshooting this at the moment. So we are starting to see a little bit of a fragmented market, so to speak. The transport's exceptionally weak at this current juncture. However, what we still are unable to do is to actually close below this wick over here, which was towards the end of the first sort of waterfall sell-off for the calendar year back in the months of January and also February for the transportation average. I don't want to really drill into that of the transport to the Russell 2000. Instead, I'd rather speak about the more closely followed US equity markets, because again, if you can find yourself not buying into the public sentiment, the public discourse as to a lot of, sort of reports that I'm reading about, i.e. that the macro bull market has ended, you're going to set yourself up for, again, some really tremendous profits. Once this market does stabilize, it begins to lay that of a proper foundation upon which we are going to base ourselves off from. Now, again, before I move into the technical picture, I just wanted to say, have a look into that pro analysis class, especially the one that we recorded over the weekend, because what you're going to see are a lot of parallels between the way in which a lot of these individual equities over here on the left-hand side of my screen are beginning to set up as they sell off back into macro support, mixed with our outlook on the overall markets as well. So if you miss this sell-off, or if pardon me, this sell-off sort of blindsided you, don't be blindsided by this impending sort of snapback rally, which in my opinion is not only going to reclaim or at least retest the 2018 calendar highs, but ultimately it is going to overshoot them and continue with the macro bull market, which has been in effect since the March of 2009. So again, just going back into the industrial average, intra-session today, we have already pushed down intra-session over 300 points. It looks as though the support area has broken. And again, you should remain on the sidelines. The risk and reward on this trade, essentially down to this calendar low, it just simply isn't there. What you need to do is simply wait on the sidelines and flip the trade when we get down, or at least see the candlesticks that are signifying to us that the sentiment, the intra-session sentiment, is shifting upon that of a buy the dip once again mentality. But that is most likely going to take place at lower prices. We do have a couple of earnings reports upcoming this week in our top 12 list. We have Apple on Thursday, we've got Baidu on Tuesday, and also Chevron, which appears to be this coming Friday. Now, getting back into the actual analysis of the NASDAQ, you can see today that we have a very nice outside day engulfing candle. It looks as though that 6,900 is all but guaranteed at this particular point, which again is coinciding back with the calendar lows, more or less, for the year 2018. Once this happens, we're pretty much going to exhaust the sell side of this market, whether it is on the molecular level or more so the intermediate level. It just depends how this foundation begins to set up, but pay attention to reversal candlesticks around these areas. Since the sell-off all the way back up here at 7,849, we've had our first target at 7,520, and ultimately our final target down here at 6,910. We have broken below this second decelerating fan line down here. So again, it looks as though we've only got roughly another 200 points, so to speak, or at least 90 points, somewhere between 90 to about 120 to fall until we're really going to at least establish that of a buyable sort of base. And whether or not we see a very strong rally out of this area, if we gradually build like we did towards the first quarter of 2018, that is still a little bit undecided at this point, but certainly you should not be looking to jump into a bunch of shorts at this time. Now, I'm going to walk through a bunch of individual stocks that I really, really like, or at least begin to overlap, all right? The market analysis with a lot of the movements in these individual companies. Again, more detail is what we went through over the weekend, and that is recorded up on the website at the moment. But if you pay attention to IBM, it's been absolutely clobbered. It's been clubbed, and it's basing right now right where we expect it to hold. If you pay attention to this again without going into the really finer details of this, if you have a look back at this big primary trend line since 1993, all right, it's not perfect, but if you extend this over, the touch that we had very early on in the year 2016 is more or less where we have just sold off into as at today's candlestick. In fact, we got the gap down, a real white body candle as at this recording, and a high wave spinning top. Okay, so if this support area holds, I'll give you an example of where this stock, or where at least we are looking for this stock to move. It'll be $140 at a minimum, but we need to see the market confirm this type of move. Obviously, these oscillating indicators are going to be naturally oversold. All right, that is a given of course the sell-off that we have moved through, but this could be potentially that of a macro support, a big correction for the stock of IBM to take us all the way back down to roughly 118 into our green rectangular box. And this is essentially a support box where we pay attention to the candlesticks, flipped with, of course, the oscillating indicators, which are going to indicate potentially that of a macro base on this individual stock here. Another interesting stock, which is presented quite nicely, or at least where it is sitting at the moment, is Baidu. If I go out to the weekly chart again, you can see that we are sitting on a very important trend line since 2009. We've had multiple touches on this stock. It looks as though we are somewhat breaking it at the moment, but if we see an earnings report come out, and if we see it more or less hold roughly this 185 handle, again, it opens the door to close a gap at an absolute minimum at $225 per share. But this could begin to turn very quickly, abruptly, and move up as high as $245, $250 relatively quickly, which would be, pardon me, a pretty decent ROI, especially if you're jumping into a bunch of calls. But again, it's a little bit premature at the moment. I'm just pointing out how I like this sort of the structural foundation of the markets, and also a bunch of individual stocks that are sort of confirming the structure and, of course, the outlook of the market moving forward. We also have, surprisingly, Netflix, which has entered into that beyond a correction, is essentially beyond down 20% at the moment, but we have also hit not 20% in the day, of course, but from the most recent market highs back in the period of June and July for this individual stock. But this support area here is the first real level at 280 that we've identified, and we're going to pay very close attention to this for a potential bounce off from this level. It's not going to set up for Tuesday. It's probably not going to set up for this week, but if we begin to see support hold around this area, again, it fits into a very nice market continuation. And again, when it comes to Amazon, we've been eyeing off $1,500 for this individual stock here. We're more or less closing at it, or very close to it, as at Monday. So again, very similar to what I just described to you on Netflix. It isn't as defined at the moment as the likes of Baidu or IBM when it comes to a macro base potentially, but this makes a lot of sense, the psychological round number. And we spoke about this again, much like a lot of individual stocks and even the trade setup on Netflix. Instead of looking to short, say for instance from 1575 down to 1500, if you flip the dynamic of risk and reward, and if you actually take the bullish outlook, I mean, it's not really described, or at least illustrated at the moment, but if you start to see those reversal signals, you've got potentially, right, $500 of intrinsic value on the call side if we see the market stabilize and continue to rally into the back end of 2018 and into, of course, the financial year or the calendar year 2019 as well. So that's really how we're interpreting market data. Obviously, Apple's probably going to be that of a market mover towards the end of the week. It's holding up relatively well. It's sitting, of course, more or less on the 50. I mean, it has technically somewhat broken it today, but above all else, it is still technically trending, and we are above the 100 and the 200. So pay attention to that. That's going to probably be a pretty decent earnings report, or at least the magnitude of it is going to be very important for the underpinning of the markets, at least the indices back down at these macro sort of calendar support lows that I've described to you a little bit earlier. But also another stock which is quite interesting is Boeing Airlines, another stock that we frequent quite often in this analysis, or at least aftermarket analysis sessions, and also on the weekends. If this can hold at 320, it sort of fits into the category of that of Amazon and also the category of Netflix as well. So pay attention to this. We still have approximately $10 to move down to 322, or at least $12 down to 320 if this support area holds, and again, this takes us all the way back to January, all right, earlier this year, it's going to be a fantastic potential basing area for this stock, much with the markets as we still flush out that of this big macro consolidation, which is still under construction. Pay attention to these oscillating indicators. We are starting to see those secondary thrusts of those histograms into net negative territory, along with the Dow Jones Industrial Average here. We haven't really seen the pickup in acceleration, but if we do see that, this is going to go back into a lot of the analysis I spoke about 2 weeks ago in that pro analysis class, looking for that secondary sell wave exhaustion. We've somewhat described it here publicly on the YouTube channel as well. But if we start to actually develop at least short-term divergence as well around this support area, it's going to be a very powerful move off from this base once it does, establish itself. But for the time being anyway, you have to expect, or at least have a little bit of a bearish outlook until we come all the way back down to the support areas. So that's going to really do us as at this Monday afternoon market recap. Be good, everyone. Enjoy your Monday evening, and I'll be back with you again later in the week for another market recap. All the best. Farewell.